an awful lot of firms have undoubtedly made significant preparations, but as we do know, the fact that the UK is leaving the customs union and the single market, which means that there will be a customs border between the UK and the rest of the EU, does present a significant change for businesses. At this point, it would be fair to say that not every business is 100% ready. Certainly the need to produce customs declarations, the need for the paperwork and the data is going to be a stumbling block for a number of firms. And just the logistical change is also going to cause some impact. So whilst we do expect many businesses to be ready, we also expect some won't be, and therefore there will be some level of disruption.
Andrew, what we've witnessed over the weekend, France closing the border to freight and clearly coming at a very complex time as businesses are trying to plan or stockpile. What are the implications of that?
I mean, I think it's quite remarkable that the border is just shut and a much more severe action than will be the case with hard Brexit. But fortunately for many firms, the stockpiling had already taken place. I think the real issue is for firms that are trying to still move perishable goods, but in both directions. And what we will see, of course, is that whilst the border is open inbound to the UK, it won't take very long before the backlog on both sides starts to cause real logistical challenges.
What does that mean in practice? What could we see shortages of?
I think in the short term, hopefully most people are already ready for Christmas. But as I say, it's likely to be anything that's perishable goods that are coming in either into the UK or exports out. I think the government will obviously be very focused on making sure that the flows of goods do continue as quickly as possible.
Can I circle back to the services side? Because what we've witnessed over last week, very strong trade around pound on the hopes that it would be a Brexit deal. But many of the currency analysts are sort of scratching their head saying, well, the devil's in the detail. If you consider the fact that we're likely to see an erosion in the services position, which makes up a very significant proportion of income for the UK, then you've got a problem when it comes to the balance, if you look at the overall numbers for the UK. So sterling doesn't justify a higher position. What do you make of that when you talk about the services side? Is there a risk that we see a dwindling in the position for the UK on the back of a Brexit deal?
Yeah, we've looked at services very heavily. Obviously, it's significant impact for the UK economy overall. I think the most recent movements in the foreign exchange market probably are a reflection of the fact that they'd already adjusted to become fairly pessimistic about the outcome of a deal, and therefore it's a reflection of the fact that the deal may now be possible rather than it's better placed than it would have been compared to staying in the EU. Many firms have adjusted. The financial services have invested significant amounts of money to adjust their business models, but that does mean that there will be certain activity that won't flow between the UK and the rest of the EU going forwards.